You are listening to chartingwealth.com for Thursday, the 2nd of August, 2018. We see stocks mixed for the day, bonds and gold down. Our book, Charting Your Way to Wealth, is for sale. If you don't have it, get a copy. Got a special release coming out for all purchasers, both the folks who purchased it in the past and those who are buying it right now before the 7th of August. We are going to put out for you our quarterly chart training. Going to send that out again. It'll be for book purchasers. We also have a special training we'll be doing mid-month in August, and that is going to be on Bitcoin, our special Bitcoin chart. Some of you have seen and experienced before. We're going to go over that again, release the upgraded version of that chart to you. And again, buy the book, Charting Your Way to Wealth. It'll help you understand what we do here at chartingwealth.com. We just got our 5th printing in today. I think I got 1 or 2 left of the 4th printing, but we cover everything from how power and wealth flows from charting the market to dealing with the emotions of fear and greed to the ETFs that we chart, our mindset, keeping it simple and straightforward, time frames, what they're all about, candlesticks for visualizing price movement, trend lines, price percent oscillator, the making use of the minor indicators, our 2 primary methods for successful charting, buying and selling, and then our last chapter, wrapping it all up. All of that is covered in the book. Those are various chapters that we have. We want you to have a copy, and you can get one by following the links on your email. Look at the YouTube channel. Look under whatever it is you happen to be watching or listening to this on. You will see links to purchase the book. We have it all available for you, and right up on the screen right now on the right-hand side is a link also. Now, let's go ahead and jump into these charts for today. We look at what the week is shaping up like on our weekly candlestick. And again, we just finished up the 3rd day of a 5-day candle, going into the 4th day. What do we see as we've made it through hump day? We see a red open box candle. Now, that's not a strong down move for the week, but it does show a lot of pullback. Price movement has blasted below the 2-day and the weekly trend line so far. Derivative oscillator still heading up a little bit. Price percent oscillator is almost flat, still heading up some. But again, not nearly what it was like over the prior 3 weeks. We go from the weekly to the 2-day. What's it telling us? Well, the price percent oscillator is heading down. Derivative oscillators losing energy. And again, this is just the 1st day of the latest 2-day candle. It is a green spinning top. That means indecision tending up. And again, it was down for the day 0.16%. But again, these are Heiken Ashi candlesticks showing us the average pace. We see that we've blown through the 2-day trend line and that the weekly trend line, we're still just above that. We won't have a crossover going down yet, but the derivative oscillator is losing momentum, as is the price percent oscillator. Still in confirmed up moves, though, on the weekly and the 2-day, no matter how weak things might be looking. On that 4-hour chart, still heading down. Don't have a crossover yet. We have what would be called a pullback, and we really see things just sliding sideways. The pullback we see in the price percent oscillator as it continues to head down. Derivative oscillator losing some of that downward momentum. If while the 2-day and the weekly are still in the same direction, this 4-hour chart reverses and starts to move up. If it does that on Thursday and Friday, might have a jumping in point. Don't know. We'll just continue to watch things and see what we see. We'll be standing by to do what the market tells us to do. We're trend followers. We are not forecasters. Forecasters don't last very long in this world, but if you find a good trend, the way that we set them up and ride them, you can do quite well, and we want you to practice with us every single day to hone those skills. What do we see on the Qs? Well, they were up for the day 0.38%. You sure don't see them in a weekly candle. The prior week was a red open box candle like we're seeing this week on the S&P 500. However, this week on the Qs is a red down candle so far, getting close to crossing over on the price percent oscillator, derivative oscillator getting weaker and weaker on that weekly chart. We go to the 2-day chart, and of course we've already had a crossover going down. That is confirmed. So we have a bit of schizophrenia between the two. That is the weekly and the 2-day. The weekly is headed up. 2-day is now confirmed headed down. And again, so far it's a green up candle, was up for the day. This is only the first day of the latest 2-day candle. Price percent oscillator, however, is heavy negative. Derivative oscillator, I'm sorry, that's heavy negative. Price percent oscillator heading down. We go from the 2-day to the 4-hour, and we can see where things bottomed out, flattened out, and again sliding pretty much sideways, a little up. We saw some up movement in the morning, and then that paired off some in the afternoon with a red spinning top. Price percent oscillator losing downward momentum. Derivative oscillator is also losing downward momentum. Price percent oscillator is pretty much flat. So again, we'll keep our eye on things. We don't have a trade right now because, of course, the 2-day chart's in a confirmed down move, even if the 4-hour crosses over going up. So that's been taken from us with the strong down movement pushing that 2-day chart over. So we'll just continue to watch and see what these charts do and what they tell us. So that's where we are on stocks. Again, like we said, the Q's up for the day, S&P 500 down. We move next to TLT, which is 20-year bonds on the weekly chart. What do we see there? Well, going into the second week of strong down movement. Don't have a crossover yet, but it looks like it's getting close on that weekly chart. Derivative oscillator losing lots of momentum. Still in a confirmed up move on the weekly, but getting less and less likely that's going to be sustained. The 2-day, of course, crossed over going down on the 2-day chart back on the 23rd, Monday the 23rd. So we see that 2-day chart continuing to head down quite strongly. Derivative oscillator gaining momentum. Price percent oscillator just spiking down. And of course, the first day of this latest 2-day candle is a big, solid red down candle on our Heikin Ashi candlesticks. Now again, Heikin Ashi means average pace in Japanese. It's our favorite kind of candlestick. It's charted completely different and formulated differently than your regular candlestick of open, high, close, and low. It's formulated differently. We have a great video, the top one on the internet, Heikin Ashi, Heiken-ASHI. You can find it. Please listen to it and study it. It's also covered in an entire chapter in our book that you'll get a lot out of. So what do we see on the 4-hour chart? Well, again, 2-day chart's going down. Weekly is weakening, but still confirmed up. We see strong down movement in the morning, a little bit of recovery in the afternoon. Like we said, the biggest move of the day is on TLT, 1.04% down. We saw where the price percent oscillator was trying to spike over going up on the 31st and then reversed right back down in the afternoon on the next day on the 1st. So again, more down movement. Things have pushed through where things had been dragging along at about the 119.30 mark and have really bottomed through that now. So we'll see where things stop on that down move. Again, don't have a trade right now on TLT 20-year bonds because of the difference between the weekly and the 2-day moving in opposite directions. We'll continue to keep our powder dry and see what develops in the future. Remember, if you have a trade, you trade. If you don't trade. First rule of trading, don't lose money. Second rule, make money. But if you lose money, it is so hard to recover. That's why we trend follow. Let the trend be your friend. Okay, lastly, gold. Down for the day, 0.73%. Gold has just been hammering down every week since the week ending the 20th of April, except for 3. And this looks like it'll be another big down week for gold. Price movement well below the weekly trend line. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. Look at the 2-day chart. What do we see? Been sliding sideways for a little while, but with this latest day, looks like it is moving down again, blowing below about the 115.70 mark or so, down to around 115.40 on our Heikin Ashi candlesticks. Derivative oscillator, however, is continuing to lose downward momentum. Price percent oscillator with this latest First day of the latest 2-day candle actually ticked over, going down more. We go from the 2-day to the 4-hour, and we can see that price movement is below that 2-day trend line, well below the weekly trend line. Looks like it's going to cross back over, going down again. Now, what does that potentially mean for you? Well, in gold, as we have been saying, we were waiting for this pullback to end, and it looks like it's trying to end. Check it out in the morning. You may have a jumping in point tomorrow on a bigger down move on gold. Just do be cautious, because we did see gold hit around 115.20, and it's still above that. We'd like to see price movement not just bounce off that 115.20 mark, but actually move considerably below it. And again, we got to go a pretty decent place back in time in order to find moves that low. We got to go way back on gold. So again, let's revert from that 4-hour chart to the weekly chart so we can see a little more, and we can see where gold is at right now, and to where, yeah, it bottomed out. Again, we can look back in time all the way back to March 2017 and July of 2017, where gold hit about this same point. So again, just be careful that it doesn't bounce off that and start moving up somewhere around that 115.60 mark, something like that. So again, it's at 115.32 now. Some of the lows there we're down around 114 or so. So just keep your eye on things. Again, if we continue to see that down move on the 4-hour chart, you can sure jump in. But again, watch and pay close attention in case that is really a bottom where you're seeing things hit right now. So that's where we are as we end the day on Wednesday, as we go into Thursday. We so appreciate you being with us. You have questions, problems, concerns, let us hear from you. You can always write us, chartingwealth1@gmail.com. And if you have an opportunity, please buy our book. We so appreciate the support from all the folks who've done so far. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.